what we're looking at here is some of the uncertainties that the markets are dealing with will hopefully reside, and what we will begin to see is back to a more fundamental approach: economy, inflation, and the Fed.
NYSE listed financial services company WisdomTree is here at the exchange to celebrate the 10-year anniversary of one of its bond funds. Well, joining me now with more on this anniversary, as the fund is listed on NYSE ARCA, is Kevin Flanagan, head of fixed income strategy at WisdomTree. Kevin, welcome.
Thanks for having me.
What is the significance of this milestone?
Well, it's our yield-enhanced U.S. aggregate bond fund. The ticker is AGGY. As you mentioned, a 10-year anniversary. We like to say it's built to last. So not only looking for performance, but also providing income for the bond investor.
What all does this product offer?
Well, you go to the ag, right, and you look at some of the subcomponents. What we do is we reweight those, and that's how we try to come up with some of the yield enhancement and enhanced performance as well.
What kind of exposure does this give investors?
It's all investment grade, so we're not talking about leverage or emerging markets. So it's an investment grade approach. It's a core approach that we feel is important, specifically in a barbell type of strategy.
And what do you think makes it unique in the market?
Well, I think it was one of the first to come to market that actually took the ag and tried to find a better way of doing it. And that's exactly what we've been trying to do over the last 10 years.
Amazing. So what is the celebration for this anniversary going to entail?
Well, we're going to be here ringing the bell up at the podium. My first time. I've been in the business over 30 years, so pretty excited about that.
That is exciting indeed. And where do you want to take this product going forward?
Well, I think we're just going to continue to build it out, make it a part of a long-term strategic solution for bond investors.
Yeah. What kind of assets under management does this product have?
It has a little bit, I think, under 800 million, right under that billion mark, and hopefully we're going to continue to see it grow as we move forward.
How does that compare to what else is in the industry?
Well, it varies, right? It depends upon some instruments have been around for a long time. They could be multi-billion. Some are newer to the street, and they could be just a couple million. So it's sitting in I think, a pretty good comfort zone.
How do market conditions impact your strategy?
Well, obviously you start with the Fed and interest rates and monetary policy. That's going to have an impact on it as well. And there is a credit component. So you're looking at rates and credit when I think you're focusing on Aggie.
Yeah. How important is the direction from the Fed chair in this product?
Well, more often than not, the closer you are to Fed funds, the more of the tight relationship. But nevertheless, there still is that focus. If the Fed were to cut rates, that you would hopefully see some outperformance from the interest rate sensitive side.
What are your thoughts on the Fed and the Fed chair right now?
Well, I think that right now Powell is just waiting for the economic numbers to come to him and make a decision accordingly. We do think 1 or 2 rate cuts will probably happen by the end of this year.
In terms of the Treasury market, how have you seen that impacted by some of the geopolitical turbulence that we've seen this year?
That's a great question. Traditionally, what we've seen sometimes is a risk-off kind of buying in treasuries, but that didn't last very long, which is unusual from what we've seen in the past. So I think global investors are coming out of a zero interest rate policy and getting used to what we would call a more normal rate setting.
Yeah. How should our viewers be considering municipals in this environment?
Well, municipals, in our opinion, represent an opportunity from a relative value perspective. And what we just found out with the one big, beautiful bill, tough to say sometimes, is that the federal tax exempt status was, for the most part, not altered or adjusted. So that's good news. It removed a layer of uncertainty for municipals.
How would you describe your strategy? Is it rules-based?
Yeah, that's what we tend to do. We call it, some people say smart beta, we refer to it as modern alpha, but yeah, they are rules-based, so there is a modest active component. We have other bond funds that are going to be a little bit more active than that. So this is kind of in the middle between, say, a passive and an active approach, and that's, I'm referring to Aggie.
What do you see when it comes to investor demand?
Well, I think investor demand here for bonds is just going to continue to be focused on user-friendly solutions, and I think that's what the ETF wrapper provides. I go back from the old school when people bought individual bonds, but we've really transformed into a new generation of bond investor.
Anything more you can share today, Kevin?
No, I just think that what we're looking at here is some of the uncertainties that the markets are dealing with will hopefully reside, and what we will begin to see is back to a more fundamental approach: economy, inflation, and the Fed.
Kevin Flanagan, head of fixed income strategy at Wisdom Tree. Thanks and congratulations.
Thank you very much.